Hey, we're down here at the New York Stock Exchange. It is, of course, the one-year anniversary of the flash crash, that big drop that happened last year. We did recover from it. I'm actually standing in front of the Procter & Gamble specialist here. The shares didn't drop that much on the New York Stock Exchange, $56 from 60 and change, but outside of the New York Stock Exchange, they dropped to 38, and of course, Accenture dropped to a penny. There were a lot of stories like that. I'm here with Joseph Mecane. He's the co-head of equity markets for the New York Stock Exchange to talk about really what's been done since then, and there has been a lot of complaining that the SEC hasn't done enough. I wonder what you guys here at the New York Stock Exchange have done.
Sure. A lot of it coming after May 6th followed on some of the patterns that we saw that you mentioned, where we did have circuit breakers in place here, but there was really no market-wide mechanism to control volatility across all the markets. So a lot of what the exchanges got together and did, along with the guidance of the SEC, was put together circuit breakers that worked cross-market to prevent another drop as severe as what happened on May 6th. And so I think we've done a lot to prevent another type of instance from that happening.
We've heard, though, the New York Times reported recently that there have been some mini crashes and flash crashes in individual stocks since then. Do you think that we could be expecting the big one, waiting for another flash crash, as Senator Carl Levin put it in his op-ed today?
I think that there's still evolution that needs to happen from a lot of the programs. I think the circuit breakers that were put in place go a long way towards preventing another May 6th, but at the same time, we've also recently filed to evolve that plan to a limit up and down plan. There's some other open items that still need to be done. We've talked about tightening up the market-wide circuit breakers so that you don't end up with as much single stock volatility and potentially halt trading on a broader basis when there's market moving events. So there's still more that needs to be done, but I think we've done a lot to prevent another massive May 6th type event from happening.
A lot of people complain about computers trading against other computers, high-frequency trading. We've heard a lot of concerns there. It has gotten slightly less popular since the flash crash. Do you think it's one of the main drivers, one of the main problems?
I think that what we've seen is just a huge evolution of technology in the exchange space in general, similar to a lot of other industries where technology has taken over a lot of functions, and that continues to be a trend. I think some of what came out of the flash crash has been a lot of education about what different strategies are, how the market works, and so I think there's been a lot of education done. I think there's been a lot of practices that have gotten some more attention. The SEC put in some rules around sponsored access and other types of mechanisms to access the markets, just to make sure that the right types of controls are in place around these types of things. But I don't know that it's necessarily changed per se, but I think there's been more attention.
I just wonder, and a lot of other people as well, if there aren't enough of these guys down here, like actual humans watching what's going on, right? Because if you let the machines take control, and a lot of people think that that's what exchanges have done just to boost their bottom line. I mean, do you need more specialists? Do you need more actual market makers with heartbeats?
Yeah, I mean, in our opinion, and obviously our model shows it, we think that there's a strong role for human and automation involvement. And so a lot of what we've tried to do is find the balance between getting the right level of technology, the right level of automation, but at the same time making sure that there is that opportunity for judgment and human involvement in situations where we think it makes sense to have people involved.
I wonder if you learned a lot from the last flash crash. I mean, if we see this happen again on an exchange-wide basis, do you think the New York Stock Exchange is better prepared to deal with it?
Yeah, I think the whole industry is better prepared to deal with it. I think we have our own mechanisms and our own human involvement that also can take over in those times of stress. But at the same time, I think the mechanisms that have been deployed across the industry should prevent another event like that from happening.
All right, hey, Joe, thanks so much for joining us. Joe Mecane here. He's the co-head of equities at the New York Stock Exchange.